Welcome students. So, we are in the process of understanding the receivables management and the important analysis required to be done. So far we have learned about the two broad parts of the analysis, that is operating structure analysis and the financial structure analysis, and there we learned it with the help of certain ratios. Now we will be talking about the next part, that is the analysis of the managerial structure of the firm, and then we will be talking about the industrial scenario, that is also very important. Here if you talk about the managerial structure of the firm, I am writing here, I have jotted down certain points like integrity and honesty, then we have track record, and then we have organization structure and systems, then is the expertise, competence and level of commitment, and then is the perception in the market. These are the important 5 points. Integrity and honesty, that is the first and the foremost point to be a honest businessman. Honest management, when we are lending to somebody, whether it is a lending by the suppliers, it is the lending of services, is the lending of say funds by the banks or maybe other agencies or other financial institutions, honesty and integrity is most important. If you are enjoying a good reputation in the market, it means the borrower's integrity is very high and he is honest, and that takes this policy of any borrower or any company takes them to a level where they want to reach or even sometime beyond that. So, we have to make the analysis as the supplier, because we are not thinking of supplying them once or twice, we are thinking of supplying them on the long term basis. And since we are talking of supplying to a firm who is not maybe in our city or maybe who is not known to us, he is in the different city on the different location. So, we try to know that if we are going to have the relationship with them for the first time, then how likely it is going to happen that they are going to make the payment of the dues on time. Because I told you something about the symbiosis, disturbance of the symbiosis in the previous class. It is not the case that supplier cannot supply, only thing is it is a chain, it is a total financial chain, because if the supplier is manufacturing some part or they are not giving the final shape to the product, they are giving the input product to the final shape to the other user. So, it means he has to sell on the credit, so he has also to buy on the credit. So, if he is buying on the credit, he has to make the payment to his suppliers, and he can only make the payment to his suppliers when his buyer or buyer from him or borrower from him is paying back to him. That is why I told you some time back that if there is a credit period, one firm has given the credit period of 30 days to the other firm, and other firm has to make the payment certainly after 30 days. So, make it a point always, the paying firm should always make it a point that it is better for them to pay by the evening of 29th day, not even 30th day morning. It is better to make the payment on 29th day evening, but never to delay it to the morning of the 31st day. For the paying firm, it is a delay of a few hours, rather than paying by the evening of 30th day. If they are making the payment after one night on the morning of 31st day, that may be very minor, very small issue for the paying firm, but for the receiving firm it creates a big problem. Maybe it is possible that the paying firm, the receiving firm had to further make the payment to their suppliers, and they had promised that on 31st day morning we will make the payment to you. So, if the paying firm is making the payment on 31st day morning, then they certainly will be making the payment by noon or maybe by the evening of the 31st day, and that way that spoil the reputation of the first firm who had sold to the paying firm, and that firm who had sold to the paying firm, they further had to pay back to their suppliers. So, it means this disturbs the symbiosis. So, we have to be very perfect, we have to be very careful, we have to be very responsible, and all these things to a larger extent depend upon the integrity and honesty of the paying firm. If they are honest, they want to make the payment from anywhere, they will arrange the funds, they will be making the payment on 30th day morning. They will not delay the payment because they understand the meaning of the business, they understand the meaning of sincerity, and they understand the meaning of not paying it on the due date, how much harm it can cause to the selling firm and even to the buying firm also, because it will spoil, it will harm their reputation. If somebody is waiting for our payment, then we must make sure that this payment reaches to the firm who has to receive the payment. Now, for example, you talk about the say Vijay Mallya's case. He is not running short of money. See, if he has borrowed money 9,000 crore from Indian banks, number one, he has mismanaged those funds, right? It means he was not honest. And as far as the integrity is concerned, now it is proven fact that his integrity was at doubt. People could not understand it at the time when they should have understood it. He never intended to pay it back. He borrowed the money just to divert it to his other firms and to flee the country, and he was not say thinking of that to pay it back. That was the reason he borrowed beyond his repaying capacity. So, as a seller, we can easily make out that how much he is borrowing. How much he is borrowing, and say for example, as we made the analysis, we calculated one ratio. Here the ratio was that the creditors turnover ratio. Out of the total purchases, how much purchases the firm is making on credit? If it is a very large amount, credit purchases amount is very large and the ratio is very small in times, in that case it is a clear indication that they do not want to make the payment, they want to default. So, if still we are supplying to them, we should be prepared for any kind of the default, and we should not expect our payment coming back to us on time, or sometime we should not be surprised if the firm refuses to make the payment to us forever. So, when you are giving the debt to a person, to a company or to a group of companies which is much beyond their paying capacity, without any collateral, without any security. To Kingfisher Group, the total loan given by the banks, State Bank and the other banks, that was without any kind of the security, without any kind of the collateral. And when they were asked and they were inquired by the different investigating agencies, they said that only on the name of brand name. Kingfisher was a very big brand name, and by just taking into account the brand name, we extended the credit, and when he left the country, there is nothing left behind. Maybe a few crores are only collectible by selling his house and maybe some other companies and something like that. So, it means we have to be careful that the borrower is borrowing how much, what is his behavior with the other suppliers, what is his overall financial position, what is his operating structure. When you make such a collective analysis in totality, you are able to find out the integrity and honesty of the borrowing firm. Say for example, now you see that who defaults in paying the credit provided by the employees, because when employees work with any company, they are also giving us other credit to the company in which they are working. They are giving at least 30 days credit. They are expecting that after 30 days on the 1st of every month or 7th of every month we will get the salaries. So, they are working on the credit. Day 1 onwards, nobody asks for the salary. They know that after 1 month we will get the salaries, and Vijay Mallya defaulted in that case also. Number of people working in his companies, they went without salaries. So, it means suppliers credit is also defaulted, employees credit is also defaulted, and financial institutions credit is certainly is very clearly defaulted. Talk about the Nirav Modi. Nirav Modi also did the same thing. His employees are without salaries these days. His firms are not having sufficient stock here. He borrowed 12,000 crores of the money from a bank, and then if you are lending to somebody without any kind of sufficient repaying capacity, it means either you are not sincere in checking the integrity and honesty of the person, or you are willfully doing it. So, it means in both the cases the lender is at fault. Either the lender has to forget his credit, or the people who have committed this blunder, they should be brought to the books and the action should be taken. But what happens, that is the matter of now the future. But for every supplier, whether it is a supply of work, it is a supply of say you can call it as material or any other input or the finance, we have to be careful about the integrity and honesty. For example, when we talk about supplying or selling our product or exporting our product, means the manufacturer in the one country, when they export their product to the buyers in the other country, sometimes or most of the times those exports are also on credit. But in that case, the supplier asks the buyer in the other country to send him a LOC, letter of credit. from his own bank in his own country who is operating in the exporter's country also. If that LOC comes, there is no other guarantee. We do not know the honesty and integrity of the person sitting overseas, but if he is able to obtain a LOC from a, say we can call it a scheduled bank or maybe a say well functioning bank, then we can make sure that yes, now our funds are safe and secure, because we are not able to know about it, what kind of the borrower he is, what kind of the buyer on the credit he is. So, there we have to go for the security, and that letter of credit provided by his own country's banker is or serves as the say collateral or the security. If he defaults, we will demand the funds from the bank, or exporter will demand the funds from the bank, and bank cannot afford to default. So, first point is the integrity and honesty. Second is a track record. If he is the first time buyer from company X, then company X responsibility is to check it with the other suppliers, how he is behaving with the other suppliers. If he is doing well with the other suppliers, and if he is making the payment on due date, then there is no harm, because track record is good. And if he is, for example, is a regular buyer from any company who is, because that credit policies keep on changing. Sometimes the companies make short term changes, we have seen in the past, sometimes the companies make long term changes. So, if we have to make this credit policy, if for example, we want to sell more to our existing channels of distribution, and for that we have to relax the credit period. So, relaxing of the credit period will depend upon the track record. If the track record of all our buyers is good, excellent, then there is no harm in relaxing the credit policy, so that they can buy more on credit and sell further more in the market and expand, help the company to expand its market share. But if the track record is doubtful, or he has defaulted sometime in the past also, then be careful, not give him the credit. So, either from the existing say suppliers, or over the years, if this company is or any company is regularly buying on credit from the supplying company, then the supplying company, while making any kind of changes in the credit policy, they must go for the track record. Then is the organizational structure and system. What kind of the company it is to whom we are going to supply, whether it is a one man show, or it is a private limited company, or it is a partnership firm, or it is a large public limited company. If it is a large public limited company, thousands of people are working or hundreds of people are working, there is no problem, your credit is secured. But if it is a one man show, or it is a partnership firm, then we have to be little careful while making this kind of analysis. Now, for example, Maruti manufactures cars, and they are not manufacturing anything themselves, only they are manufacturing is the gearbox, that is their technology. Other things, for the steel they are depending upon the suppliers, for rubber parts they are depending upon the suppliers, for the tires they are depending upon the suppliers, for the tubes they are depending upon the suppliers, for the any other glass parts they are depending upon the suppliers, and nobody thinks even for a second while extending credit to Maruti or Suzuki Motors. Now we call it as a Suzuki Motors India Limited, because their credibility is proven. Their organized structure is, it is a multinational company. Even in India also it is a large sized organization who has about 45-46% market share, right. And a big multinational company from Japan, they have the 50% shareholding in say Suzuki Motors India Limited. So, it means you can blindfully, you can think of extending the credit, rather people will aspire for that we should be a supplier to Maruti Suzuki or to this kind of the company. Similarly, if you talk about Samsung, it is a very good name, LG is a very good name, all these multinational companies, if we are supplying to them, I think suppliers try to find out the channels through which they can start supplying on credit even to these companies. But if you are supplying to the companies owned by Nirav Modi and Vijay Mallya, then think about that, it is a one man show and there is no credibility of these people in the market. And even in case of the sole proprietorship, honesty becomes important, integrity becomes important. So, organization structure also matters. We have to look for the organization structure also, that if it is a large company, do not worry much, but if it is a small company or a partnership firm, we have to be careful, or we should ask for some collateral, some security. Expertise, competence and level of commitment. Expertise, competence and level of commitment. Who is the company from where a request has come to buy on credit? Who is seeking the credit? What is their standing in the market? How long since they are in the market? What product they are manufacturing and selling in the market? What is their life in the market? If we are going to supply to a new company who has come in the market for the first time, if we are going to supply to them, or maybe a channel of distribution wholesaler or retailer who has come for the first time in the market, he want to have the credit and then to sell in the market, I think it is not possible. So, competence is very very important, expertise is very very important, and level of commitment is very very important. For example, we talk about the new entrepreneurs, people graduating from IITs, IIMs. They if some of them or any of them want to establish their own industry or their own industrial unit or their own company if they want to start, they have to certainly look for the funds. And in that case, the person or the group of those students, they do not have any other credibility or any other collateral to give. They have only a few thousand rupees in their pocket and a very good scintillating idea, that this idea, and if this idea, if I am allowed to implement this idea, give shape to this idea, then this can be a very very useful and acceptable idea in the market. The product or the service coming out of this idea will be the excellent idea and will be the excellent product or the excellent service, and I should be funded for that. So, for example, if he goes to the banks because there is no track record, there is no say known the fact that the person is competent or his idea is workable or it is the product or service coming out of it is saleable in the market, there is no idea about it. So, banks do not give the credit to the new entrepreneurs. Similarly, you talk about if they want to come with the IPO in the market, nobody will subscribe to their shares. So, even they make a public company, so that company has to have some minimum life to become a public limited company and to come up with the IPO, because SEBI rules say that there should be minimum life as your existence, maybe as a sole proprietor partnership firm or a private limited company. Day one from you cannot make the public limited company directly until unless it is being sponsored by some existing group, or your promoter shareholding should be very very high. So, it means equity is also ruled out, debt is also ruled out. So, in that case these entrepreneurs go to the then other channel of funding, and that is the venture capital or private equity. Venture capitalist has to be explained about the idea, the competence and the expertise of the person who is proposing an idea, who is proposing of establishing an industrial unit or a company, and he is seeking the assistance from the venture capitalist. Because venture capitalists, they are very very expert in evaluating different ideas. It is their job, every day they are doing that, and even the private equity suppliers are also very good business people, and they can easily make out what idea one has come with to them and whether it is workable or not. So, he will have to explain the total idea, the total concept which is he or she is carrying in the mind with the supplier of the venture capital or the private equity, and if that idea is looking workable, that venture capitalists can easily find out, then they will think of funding the business, otherwise not. And even then, if they are taking a decision in favor of say supporting the firm or the company, then even in that case the interest rate is very high, somewhere it goes up to 40-45% also, because they are going to take a huge risk for which they should be rewarded. So, venture capital in the other name is also called as risk capital. So, once they are going to take the risk of implementing a new idea, they are expecting a very high return for that. So, it means we have to check who is seeking the credit, what is his existence, what is his expertise, what is his competence, what is his level of commitment in the market. So, another important point, and the last under the managerial structure is perception in the market. How people perceive about any company. Now, when you talk about the electronics market, if you talk about Samsung, if you talk about LG, if you talk about Sony, their perception is very high. But if you talk of Videocon, if you talk about Oneida, their perception was also very high at some point of time till 2000, but after that it has seriously fallen down. Today, if you study the balance sheet of Oneida, they have to they are under say great financial distress, and they have borrowed money from banks. They are not able to repay it back. They are taking the suppliers credit, and sometime for say 6 to 8 months they are not able to pay back to their suppliers. So, it means what is the reason? Because their own product has become least saleable in the market. So, if there is no liquidity with the user of the funds, then certainly he will default or he will not be able to make the payment on the due date to the supplier. So, perception in the market is why we are having a high perception about the say multinational companies, because they have their own credibility, they have their own reputation. Similarly, if you talk about the Tata Group or the Reliance or maybe Birlas, their credibility is very high in the market. Any of their companies who are coming out with any product or service in the market, people don't doubt about that. So, there is no question of say doubting such companies by the suppliers of credit, by the supplier of material, or by the suppliers of services to them. It means that perception also works. So, third point of analysis, as we were talking about, is the managerial structure. After the operating and the financial structure, you make the analysis of the managerial structure. And the last part, this leg of this discussion is the industrial scenario. If you talk about the industrial scenario, then is the important consideration here, it is look at the competition. If it is a highly competitive industry in which the company who is seeking the credit works, then be careful. Cyclicality of industry, if say the industry is facing the cyclical trends, up and downs, for example the trends are going up like this. So, you see that how efficiently the company has been able to take care of their this cyclical trends. Sometimes the sales are going up, sometimes the sales are going down. For example, any company manufacturing the products based upon the agriculture material. So, in case of the agriculture material, say when there is a harvest season and they have to buy the inputs, for example, some company manufacturing the wheat flour. So, when there is a wheat coming up in the mandis in the market, so it means their credit needs will certainly go up, and then they will store the wheat and then they will start crushing it and converting into flour and selling it in the market, and then they will start paying off its debt. So, certainly they should be supported by the financial institution or banks at the time of the harvest season, because they need more capital, they need more funds, but are they able to pay it back on time, or how they have been managing the funds in the past, their track record will help the bank to take the decisions. So, cyclicality of industry and how the borrower is managing their business during this cyclicality of the industry is important consideration. Then is a regulatory risk. Now, you see that what has happened in the past in case of the Indian banking scenario. State Bank is then say deceived by Vijay Mallya, Punjab National Bank is deceived by Nirav Modi and his company and his maternal uncle. Now, the say RBI has become very careful. Even the SEBI has also become very careful. We converted the say controller of capital issues office after the Harshad Mehta scam in 90s, and we brought in 1992 SEBI, Security and Exchange Board of India, and after say this becoming a new regulator with the say sharp teeth, SEBI has been say effectively able to control the market and to say prove to be a very effective regulator. So, same is going to be the case with the RBI after this banking scams. So, regulatory risk is very important. Say for example, you talk about this telecom market, we have the TRAI. So, they immediately take action if somebody is not responding to the customer's needs. So, if the regulatory pressure is high, you can expect that your borrower is less likely to default, because regulator is going to take the action in case of any complaint or any kind of the problem. The regulator is going to take the action, and then say the company cannot think of say continuing their business. So, no company who want to say who intend to continue with the business can take the risk of not making the payment of their credit on time and face the ire of SEBI or maybe sometime the RBI. So, a regulatory market has to be very carefully analyzed. Technology and obsolescence risk. Now, for example, we talk about the IT industry. In the IT industry, the obsolescence is very fast. We depreciate a computer system even in India at the rate of 33.33%. Means one computer system which is being purchased today, that has to be say depreciated in the next 3 years. So, it's an example of IT industry. So, look for that if you are supplying to a company who is manufacturing the finished product by say using the technology which is maybe it is a saturated technology, or it is a some upcoming technology, or it is still going to the technology is still expected to have the market or the life. If it is a saturated technology, be careful, do not supply to such companies who are manufacturing the product based upon that. For example, we saw the Motorola case. Motorola was using the technology, certainly it went out of the market and it became a sick company. So, it had to be taken over by Lenovo. Lenovo then had to invest a huge money to bring the Motorola's name. So, name was good, their brand name was good, but their technology was old, so they had to wind up the businesses in India. They have to sell off even their business to Lenovo of China. So, the technology and obsolescence risk is very important risk. If you are supplying to a company who is not able to then on the long term basis sustain in the market because their technology has already become obsolete and they have not made any further investment to upgrade their technology or their systems, then what will happen? The product manufactured by those companies or by using such technologies by these companies, they will not be able to further say pass on these products in the market. For example, you talk about in 2000. Videocon and Oneida were the leaders of the electronics market in the color TV segment. They were the leader, not even color TV, all the segments, all the products which they were manufacturing, they were say selling like hotcakes in the market. But when we allowed Samsung LG to enter the Indian market, so when people saw the difference in the technology of Samsung and LG and technology of the Videocon and Oneida, immediately people shifted and the companies which had the highest market share in total, half of the market was with these two companies, immediately they started losing the market share after 1999 or 2000, and today you see where these companies are. And if you analyze the balance sheet of these two companies, their short term funds are provided by the banks are blocked, they are not able to pay them back to the banks, they are not able to service their debt even back to the banks, and somehow banks are trying to take that money back from these two companies because their technology becoming obsolete. They have never tried to renovate their technology and their product manufactured out of that technology that became redundant in the market and their sales dropped. So, it means anybody who had supplied credit to these companies, their credit is at risk. Then is the availability of raw material and other inputs and their pricing. That is another important component in the industry scenario. We have to see that availability of the raw materials, because for the supplier also, say if we are not thinking of supplying any material or anything, we are analyzing any company as a banker or from the bank's point of view or as a financial institution's point of view, and bank has received a request from the company to provide the short term finance of the working capital. Now, the bank, apart from say analyzing their overall financial performance, operating performance, they should also make sure what is their raw material, from where it is coming, what is the source of raw material. If it is agriculture based product, then are they able to say buy sufficient raw material during seasons, and if they are not able, then from where they are buying the raw material. And raw material source, labor's availability and labor source, and similarly the other inputs are going to give you some sense of security that this company is a well managed, well functioning organization and we should not worry about anything about the security of our credit. And lastly, risk of substitution. We are quickly seeing the change. For example, you talk about the telecom industry. The handsets we are using today, a few years back they were not into existence. We were using those other handsets which were having the buttons and other things. So, those switch based handsets are out of the market now. Similarly, when we are talking about the computers, you have today say one level of the computers, then after 1 year it disappears from the market, then say after some time the new advanced upgraded product comes in the market. So, are we able to say upgrade the technology to cope up with the market, to cope up with the changes, technological changes, manufacturing changes, so that the demand for the company's product can be kept intact? That is a very important point. Otherwise, it may be possible that we have say funded a company who is manufacturing a product which is substituted or going to be substituted very fast with the new products coming up in the market. So, it means the funds provided or any inputs provided by any supplier is at the risk. So, all these points now we have to be careful while analyzing the overall performance, because granting the credit is a very important decision, whether it is a bank, whether it is a supplier, whether it is a worker. Everybody has to be very careful, because say sickness of the supplier's health also begins with the say funding the wrong ventures or providing the short term finance or maybe the short term supplies to such firms who are not doing well in the market, and we are not able to visualize their weak overall financial position, financial health, or their overall financial performance. So, for that and part we have to do this detailed analysis, starting with the operating structure of the firm, coming to the financial structure of the firm. These are the two important analysis, and these have to be supported or supplemented with the managerial analysis of the managerial structure and the your managerial structure of the firm and the industry scenario. Industry scenario is also very important component, because when we opened up this economy in 1991, when this new economic policy came up in 1991, before that nobody had thought of that suddenly the closed Indian economy, protected Indian economy will become the open economy, and all multinationals almost in all the sectors will be allowed to come to India. So, what will happen to the Indian firms, Indian organizations who are not able to face the competition? And when it happened, most of the Indian firms had to die. So, industry scenario is very important. At the same time, we should try to have a close look in the budget document of the government every year, that what are the priority industries for the government in the coming 1 year. Similarly, we should look at the economic survey, because we are supplier of credit. So, we should see that what is the future of one particular industry or the different ranges of the industries, what is their future, what is their performance, and what is their say financial health expected to be in the time to come, because many industries, many sectors are directly or indirectly, positively or negatively affected by the budgets of the central government of India as well as the other countries. So, everywhere people who are the suppliers of credit or any other kind of input have to be very careful. So, with this analysis we stop here, and next time, before say closing this part, the discussion on your receivables management, I will discuss 3 points with you, that is a credit standards and analysis, credit terms and collection policy and procedures, but that I will discuss with you. These 3 important components I will discuss with you in the next class. Thank you very much.